Most people believe this one simple rule: save money, stay safe. It sounds responsible. It sounds smart. And it feels comforting. But what if I told you that saving money the traditional way is slowly making millions of people poorer, without them even realizing it? Not because they're careless, not because they gamble, but because the system has changed, and nobody warned them. Today, I want to show you why holding cash is riskier than investing, why your money is silently losing power every year, and what the wealthy understand that most people don't. This isn't financial advice. This is financial reality. The illusion of safety. Cash feels safe because it doesn't move. When your money sits in a bank account, the number stays the same. You open your app today, $10,000. You open it next year, still $10,000. No ups, no downs, no stress. But here's the problem. Safety isn't about the number. It's about what that number can buy. If prices go up while your money stays the same, you're not standing still, you're moving backward. And that backward movement is called inflation. What inflation really does. Inflation is often explained badly. People say, prices go up a little every year. That sounds harmless. But inflation doesn't just raise prices. It shrinks purchasing power. 20 years ago, $1 could buy you a full bottle of soda. Today, that same dollar barely buys half. The money didn't disappear. Its power did. Now imagine this happening slowly, year after year, quietly, without headlines. That's how inflation wins. Why cash is losing the game. Let's say you save $50,000 in cash. You feel proud, disciplined, responsible. But inflation averages around 3 to 5% long term. Some years, it's much higher. At 4% inflation. In 10 years, your $50,000 feels like $33,000. In 20 years, it feels like $22,000. In 30 years, it feels like $15,000. Same number. Half the power. You didn't spend it. You didn't lose it. It was taken, slowly. Why most people never notice. Here's the clever part of the system. Inflation doesn't feel like a loss. No alert pops up saying, "Congratulations, your money is worth less today." Instead, you notice it like this. A groceries feels slightly more expensive. A rent creeps up. A coffee costs a little more. A vacations get shorter. A savings don't stretch as far. People blame themselves. I need to budget better. I should work harder. I'm bad with money. But the truth is simpler. The rules changed. How the wealthy see money. Wealthy people don't hate cash. They just don't trust it long term. To them, cash is a tool, not a destination. They use it to buy assets, create leverage, capture growth. Because assets do something cash never does. They move. Stocks grow with companies. Real estate grows with cities. Businesses grow with demand. Inflation hurts cash, but it often pushes assets higher. That's not an accident. The biggest myth about investing. Most people avoid investing because they think it's risky. And yes, prices move. But here's the uncomfortable truth. Volatility is visible. Inflation is invisible. People fear what they can see. Market drops. They ignore what they can't. Purchasing power loss. Yet over long periods, the stock market has historically beaten inflation. Not every year. Not smoothly. But consistently. The real risk isn't investing. The real risk is doing nothing. Why the future is more expensive. Here's something most people don't want to hear. The future costs more than the past. Healthcare costs more. Housing costs more. Education costs more. Retirement costs much more. Your parents could retire comfortably on numbers that sound impossible today. Not because they were smarter, but because money went further. Trying to live tomorrow with yesterday's strategy doesn't work. What actually works? This isn't about gambling or chasing hype. It's about balance. Emergency cash for safety. Long-term investments for growth. Skills that increase income. A time in the market, not timing it. Money should either grow, protect, or enable opportunity. If it does none of those, it's slowly fading. So here's the real question. Are you saving money or preserving value? Because they are not the same thing anymore. Cash feels safe, but comfort can be expensive. And the people who understand this early don't just survive inflation. They quietly escape it.